Yeah, so we are catching up after the summer. And I know that this is typically a slow time. Definitely in the resource sector, we're feeling that doldrums type of time. Hopefully, it's coming to an end. But I know that you're always looking for opportunities and you seem to be able to find them basically wherever you can. So over the summer, where were you seeing opportunity? Where were you trading?
Wow. So, I mean, with the volatility in the stock market, there's been some great plays. The markets had gotten crushed from June into through July into early August. Then we saw the stock market stage a massive rally up, then a big fall just in the last couple of weeks before this latest bounce. So I would say in stocks, it's been tremendously good in terms of in swing trading and day trading and kind of positioning yourself. And then I also think, gold is starting to look very interesting down here. It's looking like it's trying to hold support. And I think the biggest thing out there that investors should be paying attention to is the dollar and then the 10-year yield. And those both have been on a tear lately, although it does look like the dollar may have topped.
Okay, so lots of things to get into. Let's pick up on what you're saying there about the dollar and the 10-year yield. Definitely you've been hearing about strength in the dollar. Is that set to continue in your mind? What are you seeing there?
So short term, we probably have a near term top in the dollar. It doesn't necessarily mean we can't go higher in a few months, but there were some key things that actually happened here. And I'm going to bring up and I'm going to show this chart for you guys. Let me just bring up my charts here and I'll show you guys what we have going on. But if we look at the US dollar, the USD JPY, which is the dollar yen, I want to show you this. So this is a line that I was following recently, and you saw the yen was just getting crushed against the dollar more and more. But look at the trend line that we just hit a couple days ago, and that to me was a signal that the dollar may start to weaken. And sure enough, we've started to see that. We should see a continued pullback on the dollar yen all the way back to at least 139. So there should be some more downside. That does imply that the dollar, the DXY, should also stay weaker in the near term. But that was a big one for me. Like so much of this market has been driven by the strength in the dollar. And what I mean by that is as the dollar was going higher, stocks and risk assets were getting crushed. We even saw gold getting crushed, right? So the fact that the dollar near term has topped, it should give the stock market, crypto, a little bit of a reprieve to maybe have a small bounce higher.
Okay, so that'll definitely be something to look forward to. And okay, very helpful. Thanks for going over that as well. So we need to make sure that we look at gold. And I mentioned it's been, kind of a slow summer in the resource sector. I know that a lot of our audience is getting a little bit tired of hearing that gold has maintained its value. It's going to go up. You've told us, I think the last time we spoke, the latest kind of outlook for gold was 2,400, 2,500 within the next 12 months. So I want to check in with you on that, maybe hear from you on why we should still be believing in gold.
Yeah, so very true. And the number one thing is I think by year end, my price target as of the beginning of the year was about 2,400. That's not going to happen this year. I think you might get back to 2,000 and a half, which would be that high, that triple top high. But the dollar strength has just taken a lot of energy out of the sales of gold, right? So when the dollar goes up, gold generally reacts and goes to the downside. The only thing I would point out, and this is a really cool point about gold, is gold has still been an amazing performer this year. Number one, if you looked at gold in terms of euros, it's having a great year. If you looked at it in terms of yen, it's having an awesome year. In terms of the dollar, not so great. But even then, the dollar's rallied 15% this year, and gold is only down about 4 or 5% for the year. So think about that. In a normal market, if someone told me the dollar was going to be up 15%, I would be like, okay, well, gold should be down 15% then. The fact that it's only down 4 to 5% tells you that it's actually doing its job and holding on to its value very well, especially when you compare it to the S&P or Bitcoin or anything else. So I think, again, you have to just say gold is doing its thing. If the dollar, and eventually the dollar will pull back dramatically, then gold will have its big epic move here. What I loved seeing is this sideways chop on the daily chart. This again is bullish consolidation, and eventually the probabilities dictate that this pattern eventually breaks to the upside. So again, it's not the sexy mover. We're not seeing those big moves in it, but in reality, it's actually been a very solid performer in spite of a really strong dollar.
Right. And so good job for gold. If you were somebody though who was invested in the gold companies, for example, if we
Mhm.
look at GDX or GDXJ, it's not looking so good. So can we talk about that discrepancy? And do you see that as an opportunity on the stocks side?
Right. So, and this is a great point, is because a lot of people are love the miners because you get a bigger bang for your buck. Usually, if gold goes up a little bit, the miners go up a lot more. The reason that hasn't happened and the miners have declined so much is because of inflation, right? So if gold is staying steady and the miners are mining, what's ending up happening to the miners is they still have to purchase equipment, pay people to mine that gold. And we know that wages have gone up dramatically. The price of materials have gone up. So all of their costs from mining have gone up sizably, but the price of gold hasn't gone up. So that's where the disparity comes in, where their earnings are getting hit because of that. So the miners have been under a ton of pressure, but this is the cool part about it. The mining chart, the GDX chart, hit a major support this week at these lows. And I love, the biggest thing for me is these parallel channels where you connect the highs and then you look at where the lows are and look at this area to this area and look at the low this week. And then look at this secondary level right here and how that coincides. And if we zoom in, that's right the low on the GDX. So GDX has already bounced off of it. I would say look for maybe consolidation, and then GDX is a big buy here. My thesis for why I think GDX is going to be good for the next 3 to 6 months is that as you see inflation coming down, I do think the miners start to outperform now. So they were underperforming as inflation was going up and getting scarier and scarier. They should outperform now if inflation does come back in.
Okay, that makes a lot of sense because, all you have to do is talk to these companies, read their financial statements, and you'll see that impact of
Yeah.
inflation. So,
And in fact, one
yeah.
more point, and it's super intriguing point, is like, so Newmont Mining reported earnings, and one of the things they said is they said, we're gonna stop mining in this particular way because it's too costly. And I thought that was fascinating because it reminds me of how Bitcoin does its halvings, where it gets harder or more expensive to mine and it reduces supply. And the idea is as prices go up for mining and mining equipment and labor, these companies are going to mine less because they it's too costly. And what that does is it reduces the supply of gold coming onto the open market, which inevitably, if you reduce supply and demand is there, price will inevitably go up. So it's another signal why, and again, this is a more of a longer term signal, but it's another signal why demand will go up and price ultimately should go up on gold.